Hey everybody, it is Wednesday the 19th of March. Just doing a little market update with Bitcoin specifically. So, looking at the interest rate decision, as expected, no change. We got some pretty good volatility around it, regardless, which we'll go through. But yeah, two rate cuts still expected this year, but as such, no rate cuts for right now. Some guys are saying that it's a little bit dovish outlook on the potential for the rest of the year, but at the end of the day, two rate cuts. It's not exactly what you would want to see for some type of refinancing interest rate. So effectively, remember the U.S. has to refinance like somewhere in the ballpark of $7 to $9 trillion of debt, and at the 4.5%, it is absolutely soul crushing if it had to do it with the current interest rates. In any case, looking at the long short ratios for Bitcoin, we had some nice grinding upside price action. What does that do? That gets retail shorting. As they short, we started breaking stuff and we gained back March to go higher. So pretty strong move. We're back close to 50-50 in about a 24-hour period from being over 2 to 1 long to short. So that's overall good. The funding rates as well, wildly neutral bullish. Well, bullish, I guess we could say. But yeah, very good across the board. Very low. DYDX is an outlier. Bybit's an outlier as being above what's expected. But in general, we've had a major move up, and it's being in some ways let happen by the funding rates from the exchanges. On the liquidation side, so we do have some nice strong moves up in like the 48 hour. If we go a little bit higher time frame, look at the 2 week, we'll go through some of the liquidation zones that we talked about getting ripped through because it was a matter of time. So we've taken the first chunk here, the big one, a couple million here, up towards about 86K or just shy of it. The next big one's up here at 87, 88. I think we do have some nice upside track. We've actually gained the March level. If we do start losing March, we then want to see a loss of 83, call it that low there at 83.6 to start breaking stuff to come lower. But until then, it looks relatively good for a potential continuation, at least on the liquidation side. On the liquidity side, this is the order book heat map. We're seeing resting limit orders as they come in. So as we broke above the March open, we had some higher lows and actually some bullish back tests of that March open level. We do have some stuff stepping in above us, some pretty aggressive ones right at 86.5. That's kind of the next key level on chart to kind of gain to give some more priority to the upside potentially. But the nice thing is, since the interest rate decision happened, we have had a big step in of orders below us. So looking to try and hold the low to influence price to push higher. We're at resistance here, but again, we just grabbed quite a bit of the liquidations. The next big block, if we start sweeping it, should take us up towards 87, 88 if we can start clearing some of this stuff. So going over to the chart specifically, as we're looking at it, yesterday we talked about this move, right? We talked about either where was it here? So we talked about the move up. Eventually, we would either have a failure that breaks back to the weekly open or the gain. What did we get? We got the gain. The gain is the nice one, very clean, bullish close over the March open, bullish back test for a continuation move. Still looking good. We're starting to clear. We're almost completely clear of that CME gap. I've removed it since it's mostly taken on the Bitcoin CME. You can check it yourself. The ticker is CME1 exclamation mark. So the key level here, yep, gaining above 65.5. That starts to change some stuff pretty dramatically and opening up that test higher where we want to see retest in the 88 to 90K zone where we could eventually see some type of potential reversal. For right now, it looks good. Retail is trying to short this aggressively, which is good. And it's giving us some potential for continuation. So what do we want to see for some breakdown? Really simply, if we do start losing the March open, that's not the worst thing. We can wick underneath it, regain it, and keep and continue. If we do lose it, bulls bearishly back test it and then lose some of these lows down here at 83.5, that's when we want to come back towards the weekly, reestablish some support, because any loss now, since we're in a pretty decent upside track of making higher highs and higher lows, any loss the weekly open at this point breaks us down probably to make another leg into this structure sub 80K. So still looking good. Again, you're still looking for higher lows to continue. We've got the higher low. We lost this structure here, so it looked a little bit janky, but the fact that we gained the weekly yesterday and then gained the March, we're gaining levels to go higher, which is nice to see. On the higher time frame, this is a very major gain on the daily time frame. So how do we know it's gained? Well, we need to see a close. We still got 4 hours left on the daily. We want to see a close above March, closing back below some of these levels. We're retesting some daily structure underneath, and in general, it looks relatively good. We want to see closes here. We want to see bullish back tests, and with this daily close coming up, we definitely want to see it close above March, but most specifically, we want to see it close over this. So 84K is definitely the must close above for the end of day. If we do, we're going to get a daily bullish engulfing candle. And when you have these major bullish or bearish engulfing candles, it just shows you areas where the price has completely rejected previous support or resistance. In this case, we've rejected resistance. We've said, no, screw it. We're going to go right through it. And with that, now this 84K and all the way down here to 82.7, the weekly open at 82.6, this becomes a really big level to hold for some higher lows. So just keep that in mind. Watch those daily closes. It's going to be key to hold us higher. On the lower time frames, yeah, it looks pretty decent. There's some local potential failures. We're getting close to some major resistance up here around starting at about 86.2. I would expect we get some type of pullback if we get into this zone, just because there's some upside liquidity, some resting shorts try to hold us down. If we do fail that, we come back down to this like local low we've done here at 83, call it 85.4. We want to see how really hold for a really bullish move. And then if we lose that, we should come back down to retest previous structure. But overall, we've had the continuation up. We talked about the gain of the weekly yesterday, how important that was. We're seeing the gain on March on the 4 hour. We can easily come back down to March to do some back testing. It wouldn't surprise me at all. If we start losing this stuff, obviously getting back below basically this is the low we cannot lose on any time frame because it forces us to do a weekly open retest. If we lose this and the weekly open, we sweep the lows and potentially make new lows. But in general, you're looking for higher lows to potentially continue, especially on pullbacks, just because we've broken some stuff. That entire thesis goes out the window. Lose March, lose the low down here at 83.5, 83.6, and then you kind of have to do a much deeper pullback. But in general, higher time frame play here is really simple. Continuation is still on the menu until proven otherwise right now. We've broken into the range above us, which is good. You're looking for some type of pullback in this zone. It can just rip through it. Like, that's still the direction of travel right now. But if we do have those local failures that start to fail some structure to come back down towards the March open, potentially back towards the weekly, you want to see a weekly hold for that kind of continuation. But until that happens, it looks relatively good. Watch it. Thursday's coming up, and I'll catch you tomorrow. Peace.